to Nigeria. Monetary Policy Committee has kept its MPR at 12% for the 11th time in a row. That's in line with predictions. The CBN did, however, introduce a 50% cash reserve requirement for public sector deposits. ABN's Keisha Gitari spoke to Sanusi Lamido Sanusi, who is the Nigerian Central Bank governor, to find out more about the committee's agenda.
Well, at any point in time, you've got to consider what's happening within and outside your economy, and also what emphasis you give depends on how severe the problems are. Most of the problems outside the country you can't do anything about. What you can do is try to project how they're likely to impact you. So, for example, the slowdown in US growth, the slowdown in growth in Europe, or the recession in Europe, the slowdown in growth in China, Brazil, India, South Africa, all should theoretically translate into a moderation in commodity prices. So we can expect that oil price will be impacted negatively by that. Bernanke has made it very clear that exit from QE is not imminent and doesn't mean tightening. But however you put it, the moment the United States slows down on its purchases of assets, you're going to have some form of reversal and a rise in US Treasury yields. We never assumed for once that portfolio flows were permanent. We always knew that there would be a time when we'd have some reversal. We'll try to keep as much as possible, and hopefully our equities market will be attractive in its own right, and people will be able to attract strategic investors who are there not just for the carry trade. But the important thing is to always have enough reserves to accommodate. And so when the recent shocks happened, we drew on reserves to support the currency, because we always knew that from 48 you could move to $30 billion. It's going to kill the economy. Stability was very important to us.
What are the MPC sentiments with regards to fiscal consolidation? What are the MPC sentiments with regards to that so far? What else would you like to see take place?
Well, I've made it very clear that there was progress in 2012, but 2013 is hardly an era of fiscal consolidation. I think if you look at all the indicators, if you look at the level of government spending, if you look at the level of government deficit, if you look at the rate at which excess crude savings have been drawn down, we've drawn down over 700 billion this year. Are we borrowing locally, domestically, and internationally? I don't think anyone would seriously claim that we are still in an era of fiscal. Well, we may have the intention, but the numbers do not support that, especially with the collapse in government revenues. And this is really the problem. We had, from the beginning of the year, cautioned at the National Assembly that this assumption of 2.5 million barrels a day and $79 was simply not tenable. It was over-optimistic. And so we've seen a collapse in revenue, but the government is obliged to have elevated spending, and a lot of that spending now is non-discretionary. We had an increase in salaries of civil servants in 2011. You've got an increase in debt service, and these are non-discretionary expenditures. So what we have said is we commend the government for the work it did in 2012 on fiscal consolidation, and we do hope that in 2013 we'll begin to retrace in the second half, retrace our steps and try to get back to that trajectory of fiscal consolidation. It's going to be very difficult as we move to elections, but that's where we are.
Now, at some point, we do expect to see the US Federal Reserve go ahead with its tapering off of quantitative easing. Given the inflows of funds that we saw recently, how prepared is Nigeria for a possible mass exodus of funds?
You're not going to have a mass exodus, I don't think so. I mean, unless you have a huge shock. Okay, the tapering will happen gradually. People will be able to have to forecast it. You can see from the economic indicators of the US when you think there's certainly latest economic data would not suggest that you're going to have that tapering immediately. I don't think anyone seriously expected the Federal Reserve to continue buying securities ad infinitum. To that extent, there is no big surprise. It will be, and hopefully, when people stay in the country, even if they came in initially just as opportunistic investors looking for carry trade, hopefully there will be enough progress for the country to attract longer term commitment in the equities market, longer term commitment into infrastructure, into the power sector, into the oil and gas sector with all the reforms. As long as we continue attracting foreign direct investment, which we haven't done much of now. We've had retention of profits by some companies like MTN, and you've got joint venture payments by some of the oil companies. But we need to attract more money into power, more money into, say, downstream, into gas to power, into agriculture. If we're able to attract that kind of long-term investment, then the balance changes.
Does the MPC anticipate a major withdrawal of funds when the US Fed's tapering program kicks off?
What we can do is be ready for it. We have to keep track, and we do keep track at any point in time, of how much portfolio money came into the economy, and see what percentage of our reserves that represents. And so long as we keep track of it and we're able to pay it off when it's time to go, we don't have a problem.